good afternoon, my CAREB Realtors family. What time is it? Let's see if anybody knows.
My
It's a
time.
It's
great
my
time to be a
time.
realtist.
It's
It's
my
a great,
time.
yes, it's a great time to be a realtist. Thank you, somebody who said it. And it's also tax time. So I want to welcome you all here today. This is 𝐂𝐀𝐑𝐄𝐁, your third VP of CAREB of Education. And we are here, you guys, once again for our bi-monthly Hour of Power. So you guys, twice a month, the second and fourth Wednesday of the month, we will bring you guys our Hour of Power. And today, you guys, this is going to be a very, very special Hour of Power. And I just realized, you guys, this is the end of the first quarter, right? And we start off our Hour of Power for 2025 with this special guest speaker. And so it's appropriate, you guys, that we end this quarter with the same special guest speaker in honor of what? National Women's History Month. So you guys, our special guest speaker, hold on a minute, because you guys know she does so many different things that I had to write it down, right? So you guys, our special guest speaker, you guys all know her, you guys, as the past president for Consolidated Board in Southern California. She was our CAREB third VP in 2021. You guys all know her, you guys, as a real estate licensee for over 13 years. She's a former teacher, speaker. But you guys may not know, you guys. She is also, you guys, a tax consultant. So I know it's tax time. I know she's busy, Gloria, but whenever I call her, she always comes through. So all you guys give a special thank you to our special guest speaker for today to help all of our realtors make sure that you guys are taking advantage of our tax laws. So you guys, please, you guys, give it up for the one and only, the queen herself, Miss Anna Tutt. Welcome, Miss Anna.
Thank you. I appreciate you, Wanda. Thank you so much, so much. I appreciate you. Yeah, she drugged me out. Y'all know I'm over here like cross-eyed, glasses probably looking like this. I don't know, my hair probably looking like this. But yes, this is really, really a busy time for me. But for my realtors family, I got you. I got you. I got you. And you know what, Wybet, that you don't even know? You know, I started the Hour of Power.
Yes, I
Yeah,
did know that. And we're gonna carry on your legacy.
I love it. You guys are doing a great job. I just want to commend you. I appreciate you doing an awesome job, Wybet. Keep it up. Keep it up. What you say, Sharon? I see something. I'm up. Let me open up my chat too, so I can be able to see.
Oh,
Okay.
that was me.
Aw. Can't talk. Okay, perfect. Hi. All right, everybody on here, I mostly know. So this is exciting. I'm gonna kind of make this personal as well for you, but it's very important for us to take advantage of our all of our tax write-offs. As a realtor, as a realtist, we're business owners, and sometimes we don't have that hat on that we're business owners. We say, oh, I'm a realtor, I'm a realtist. No, you are a business owner, and you have to think about that fact first and make sure that you have your structure, making sure you have your foundation, because what you are a business owner. All right, and it is your time to shine. So I'm going to talk about some tax tips. I'm also going to talk about some tools, and I'm also going to kind of ask you to make sure that you're taking advantage of all of the tax write-off, but making sure that you have your structure. How many of you are and put this in the chat, if you are a sole proprietor, put a 1. If you have a LLC, put a 2. If you are C Corp, put a 3. And if you're S Corp, put a 4. All right, I got a sole proprietor, I got a 4 S corp. Okay, sole proprietor. All right. Um One of your assignments is going to be for my number ones, okay? And I have LLC. Okay, perfect. Those who are not I want to tell you a secret that you don't know. You're running a business. So when the IRS look at your tax return and you are preparing your taxes on a Schedule C for those who are sole proprietors and LLCs, you're using a Schedule C. You're saying you're a business, but you have not put your business in the right entity, right? So this is important because you want to show that you're a business so that you don't get flagged. There are signs that a lot of times people don't look at in filing your taxes so that you don't get red flagged. Because there's people who do not have a business, claim a business, so what? They can get a tax refund. Okay, so that's important. That's a tip that I didn't plan on talking about, but that's a tip that I want to make sure that you guys understand. Everybody understand that? If you understand that, put yes in the chat or a thumbs up so I can make sure that you understand. And do everybody here know what form that you, okay, I see yeses. Do you know what form you are filing your tax return on? Let me know what form are you forming for your business, 1040. But for your business, it's a certain form that you're using. Okay, okay, 1120S, yes. Pass through, yes. Okay, perfect. And then those who are ones and those who are LLCs, you're using a Schedule C. Okay. I'm not sure form. Okay, perfect. You're not sure, but I just share it. So Sharon, you're using a Schedule C. So on a Schedule C, there's a lot of write-offs that you can write off. So as realtors, we do a lot, right? How many of you keep track of your mileage? This is number one. And I think I'm just going all off script of my notes. Me, yes. Perfect. How many of you keep track? Like you write it down or you keep track somewhere? That is very important. Put in here on the chat if you keep track of your mileage and how. Tell me what type. What do you do? Yes, a mileage book. Perfect, Sharon. Anybody else? Google Maps. Okay. Gloria. Awesome. Someone else. All right. Write this app down. It's called Expensify. This app is good for a couple of things. One, it's good for tracking your mileage. So you can put your mileage when you're going somewhere and it'll track your mileage. You can also take a picture of your receipts and you can keep your receipts in there. So it's like an all-in-one. I call this app an all-in-one. It's called Expensify. And somebody said law. Good, good. And the reason I asked about the mileage, because that's the number one thing that we write off as realtors, right? Because we're going to show property, we're always out here in our cars. And so we end up writing excessive mileage, but a lot of times people don't track their mileage. So this is very important. That's going to be the one thing that you'll get audited on, and you don't want to get audited. So you want to make sure that your paperwork is correct. Okay, perfect. Please put the app in the chat. I will. Okay, just don't let me forget. Yeah, Apple has Mile IQ, but Expensify, you're able to keep your receipts. So when you out and you like when we at the NAREB conference, right? Or we at the CAREB conference, we out here having dinner. You don't take a picture of your receipts and you just threw that receipt away. So you can take a picture of your receipt. You buying merchandise, right? When you buy merchandise from Anna and Anna, you can write that off. Why? That's merchandise that you're buying for your business. And so you can put that receipt and then it'll track it for you. Another app to use is QuickBooks to make sure that you have all of your expenses. If you're not a person that makes sure that you have your expenses, what I tell my clients is to get I should have had a manila folder. I have them get a manila folder, those who don't want to use apps, right? And put all your receipts. At the end of the month, track your expenses. That way you don't track it at the end of the year. Most of the time, I have somebody bring me a whole shoebox of receipts. I said, I'm not doing that. You want to pay me $1,000? I'm not doing that. That's too much work. But I have to teach. I had to learn. I had to teach and train. You have to make sure that you are running your business This is not a hobby. So a business means I have to keep track and I have to keep records. And that's why QuickBooks is really good, because you can upload everything and then it will calculate and have your spreadsheet. Or if you're a spreadsheet person, you will be able to create your spreadsheet of what you spend in every month. I think I have some too. So let me make sure I make notes so I can send that to you too. So Yvette, make sure I have everyone's email who is on here, because I have something
Okay,
for
I
real
sure
estate
will.
agents that you can track you can track your spending, you can track your closings, because this is important. You know, we buy closing gifts. They tell us that we only can spend so much, but it's a way to track everything and it's a way to write off everything, okay? So I'm gonna make sure I have that spreadsheet for you guys. Spreadsheet of tracking. So those, you may not even have it in your budget to do QuickBooks, but this is the way that you can track. The Expensify is a free version and it's a paid version. That's, you know, I try to help it. I try to help my agents free 99 as possible, because we spend a whole lot of money. And so we don't think about how much money that is legit. And then sometimes we'll over write off. Like somebody might write off for office expense and you might write off $5,000. And IRS said, "What? Really? You spent $5,000?" So I always tell anyone, whenever you're doing your write-offs, make sure that they make sense. Don't over excessively write off because you don't want to pay taxes. You also have to think about paying taxes is okay. Why? Because you paying into your Social Security. So no one tells you that. But also, you got to think about, I'm running a business and not a hobby. So sometimes I'm going to have to pay taxes. If I can minimize them, that's perfect. There's other ways to minimize them. So that's important too. All right, everybody follow me there? Okay, I'm all off my little notes. All right, everyone with me so far, because this is like key important information, and I'll go through all of the areas that you can write off. Thank you. You got it for me, Gloria. She put it in there for me. Thank you, Gloria, for helping me. I appreciate you. Um, any other so everybody follow me. So far, what did I talk about? Let me make sure, because this is important for us. Don't over what? Just somebody put in the chat. I want to make sure you're paying attention.
Don't overestimate your expenses.
Mm-hmm. Not overestimate, don't over write off. So like if you didn't really spend $5,000 on office expense, don't put that there. And understand where everything goes. And I'll talk about that as well, okay? All right, good. Don't over write off. All right, perfect. How many and another thing that's a pet peeve when I have clients, they write off their cell phone, they wife cell phone, their kids cell phone bill. I said, no, you only can write off your portion. So that's important too. The IRS is going to reward you when they see that you didn't take all of your write-offs. So they see that you're not trying to take advantage of them. You have so many people who are taking advantage of the system, which makes it bad for the business owner. And that's why you want to make sure that you are set up as a business owner and taking the proper write-offs. Okay. All right, perfect. So I'm gonna go down the list of some things, but I want to include some things that I want you to always think about in writing off. How many of you think about your own medical expense that you can write off? Didn't think about that, right? Me? Okay, good, Sharon. So we don't think about, because we're self-employed, we don't think about having what insurance. So medical insurance, if you're paying into medical insurance, that's a write-off. Another thing that we don't think about that I'm gonna tap into that I want to talk about is having our own retirement. Did you know that you can have a retirement? For self-employed, it's called a solo 401k. But you know, there's the IRAs, there's the SEP IRAs, there's the Roth IRAs. And that's where you talk to your advisor. And Wabette is good in that field. I'm gonna let that field be her field, and you can have a conversation with her. Because what I found, no one told me, no one educated me. So I didn't set myself up. So in my brain, how I was gonna set myself up for retirement is making sure I have a property, right? So a income property, that would be my retirement. But the crash came, I sold the duplex, right? So we have to change our mentality, and some of us have to work harder to get us to the end goal. But if you set yourself up now, that's also a write-off, because you're paying into your retirement. So that's another write-off that we don't even think about. But this is also helping you. Okay? Everybody follow me? Thumbs up? because I can't see your heads. I only can see Wabette. So thumbs up if you follow me. Thumbs up if that's clear. Okay, I see you. You give me a hands clap. Thank you, Sharon. Thank you, Renee. All right, perfect. So I'm gonna piggyback off of how many of you write off your home office? Thumbs up if you write off your home office. I see one. Is your hand up for a question, Sharon, or is it up for you write off your office? Okay. Okay, good. So those who are not writing off your office, you can write off your office space in your house. So if you have a section like where my office I have my own little room. It's in my little patio. I done made the whole area as my office. So I get to write off that space. You also want to know the square footage. But a lot of times people don't take that because they like, oh, I don't go into an office. No, but you have a home office. You can write that off. So that's very important. You are a professional. Do you write off all your professional fees? You pay car, NAR, JAR, bar, and everybody, right? You pay your realtors dues, you pay your CAREB's dues. Do you write that off? Do you keep track of that? Is my question to everybody. You go to all of the events, right? Don't we go to all of the installations? All of that is part of our business, correct? Keep track of that as well. We don't think about that. So keep track of that you are participating and write that off. You are also, when we go to, like, there's Realtors Week, there's different events that we go to. That's mileage that you can write off. Are you writing that off? Something to think about. Now let me give you another caveat. Many times in our organizations, we're giving back, right? We're doing charitable contributions. We're doing charitable work, right? We don't even think about writing that off, but you could write off a portion of the mileage. And if you're giving back, so let's say you got a clothes drive and you giving the clothes. If the organization is set up as a nonprofit, you can write that off. So that's charitable contributions, right? We don't think about that. So make sure you're taking advantage of that as well. Okay. Everybody follow me so far? Now, when you're going to take education classes for CAR, NAR, or even for like we just signed up for the Developers Academy, that's education. So you get to write that off. And anything else that you do that's education related, like I used to go to Tom Ferry's conferences all the time. Going there, the trip and everything, that's a complete write-off. Paying for the registration fee, that's a write-off. When we go to NARAB, that's a write-off. That's the registration fee. That's education. Okay? How many of you are writing that off? Thumbs up? Thumbs up if you are, thumbs down if you're not. And then put a, okay, I'm going to start. All right? Okay, good. All right, so I hit that. Let me make sure I'm hitting. Okay, I told you that already. Now, one of the things, I love it, Gloria. Thank you. You will start. That's what I want to hear. One of the things I want to tell you that we don't think about is when we owe taxes. And that's the main thing that we're scared, right? We are fearful that we're going to owe. And I'm going to talk about two things, owing taxes, and I want to talk about the corporations, okay? So when you feel that you're going to owe, pay quarterly. So every time that you're getting paid from your commission, and this is how you need to think, I'm not getting taxes taken out of my commission. Anything that I do, contract work, I'm not getting paid. I'm not getting taxes taken out. Take out 10% from anything that you're getting paid. So if you got a commission check of $20,000, you need to take $10,000 and put in a separate account for your taxes. So at the end of the year, you're not having a, I owe $15,000. I don't have $15,000. But if you put the money in your tax account, that's your other account. And if you hear me talk all the time, and I tell my clients the 70-30 rule for real estate, we need an extra account because we need an account for, and business owners, what I tell them, you need an account for your taxes. And we don't never think about, we need a savings account designated for my taxes. And so that's where I put the extra, my tax money, I put it in that account. The other thing that you could do is pay estimated taxes. So every quarter, you're paying your taxes. So at the end of the quarter, we're ending the quarter. So if I made, let's say I made $40,000 for the first quarter, I should have 10% set aside. And that's very important. But if you know every year how much you owe, like if you look at how much you owe last year, you should have paid quarterly taxes on that amount because you might be around the same or a little more. But I just like to tell people, be disciplined to take out your own taxes. It's called, that's part of being a business owner. Okay. Any questions on that? Because that's very, very important. No? No? Okay. Y'all sure? Y'all good? Okay. All right. Okay. All right. Let me see. I talked about charitable contributions. I talked about QuickBooks and 𝐿𝐻. I need to start doing that. Okay. Yes. Yes, ma'am. Okay. All right. One other thing I want to talk about is corporation. A lot of times people don't want to set up a corporation because we got to pay the state $800 whether we make money or not. What I tell people, what I started doing in my brain, what I told you about that tax account, that tax savings account, if I know I got to pay $800 every year, somebody calculate $800 divided by 12. I want you to see how easy this is. $800 divided by 12. I put in the chat, what's the answer? Not Wabet. I need somebody else. Okay. 66. Okay, so round that off, we're gonna say $67. So if you put $67 in a savings account that you don't touch every month, you're gonna have your $800 at the end of the year. Is that doable? And now you are a business owner. You guys follow me? So it's no excuse for us to say anymore, I'm not going to set up a corporation because I don't want to pay the state $800. You got to say, I am a business boss owner. Are you a business boss owner? Because put it in the chat. I'm a business boss owner. So I'm going to set myself up as a business. So put it in the chat if you're a business boss owner. Say, I am a business boss owner. Put it in the chat. There we go. Business boss owner. So it's simple. Put that money aside. And I even had to tell myself that. I was like, you know what? I got to pay $800 every year. Then you worrying about scrambling to get $800 plus whatever else you owe. Put that in an account every year. I said the 70-30 rule. I start attaching that. So that's why I'm saying you got to have that business account. All right. I love it. I love it, ladies. Y'all are on it. You on it. You on it. All right. Let me see what else. Okay. So I'm going to go over. Now I'm going to go over all the deductions that you can take. 1 second. Any questions for me so far as I shift? Yes, no, maybe? No? I see some head shaking. Okay. 1 second. I didn't pull this up sooner. I'm sorry. Let's put this over here so I can see you guys. Okay. Make this a little bigger.
I hate that I can't talk.
Get my Zoom back. Any questions? Y'all quiet.
We have a question that says, can you talk about the different corps?
Yes, I can. Let me make a note. Talk about the corps. That's a whole nother training. All right. I'll do that now, and then I'll talk about the write-off. So the different corporations that you can have: LLC. An LLC is I don't have all my notes about my corporation. That's a whole nother session. But the LLC, you'll file that corporation on a Schedule C. So what does that mean? That means that you're also going to pay self-employment tax. Okay, so you're going to get double tax. So I always tell people you're going to be double taxed. But you also have to look at where's your business, and that's talking to a financial advisor to say where's my business, where do I want to see my business? Okay. Then you have the corporation, and a lot of people put their corporation so that you know somebody sue you, you cover. Then you have the S corp. The S corp is not double taxation. Real estate agents, we really should have the S corp. It's a better corp for you. Okay. If you need more information, I'll give you my I think I have slides, or I have some handouts or presentations somewhere. I'll send that to you. So I'll make sure you guys get that as well. But you just have to understand, you get to write off so much and then you're not double taxed. So with the S corp, it's like you're going to give yourself a K1. So then you're not double taxed. And that's something that you want to look at. Okay. Everybody follow me? All right, perfect. And one of the things I want you to always think about, because we're business owners, we're getting older. We want to have some retirement. You want to make sure that you have your retirement. You want to make sure that you have your Social Security. Okay. So you want to pay into it. All right, so here are some of the write-offs that I want to make sure that you're taking advantage of. I kind of talked about the ones that most people don't think about, but I know everyone is taking advantage of advertisement. Yes? Thumbs up? Yes? Are you just taking your advertisement of business cards? Are you taking your write-offs of business cards, flyers, right? It's so many forms of advertisement now, digital advertisement. Are you paying for Facebook ads? That is a form of advertisement. Are you taking those write-offs? Put thumbs up if you are. And then there's other subscriptions, like if you paying someone to do your work for you, that's another form that you want to be taking, okay? I see yes. Can I see somebody else tell me? I don't see. Okay, I'm gonna keep going. All right. I talked to you about your expense for mileage, but on your you can also take expense for your car. And so it breaks it down. You always want to take the higher expense. Um, Mileage is going to give you a high write-off, especially for us because we drive a lot. But you want to keep track of your maintenance on your car. Any maintenance that you do on your car. Keep track of the insurance that you pay. Keep track of the interest that you pay if you paying a note on your car, if you leasing the car, or if you own, I mean if you purchasing the car. Commissions and fees. So, there's different organizations that we may have to pay commission and fees. You might have to pay someone a commission. That's a write-off. If you have labor, so, contract labor, if you paying a VA, that's a write-off. Okay. You paying that VA, but at the end of the year, you got to give that VA a 1099. Don't let these VAs off the hook. You paying these VAs, they are your contract employee. How many of you sending a 1099 to them and writing that off? Not thinking about it. You leaving money on the table. And see, this is why it's important to be set up properly, because now you can send them a 1099. If I'm a sole proprietor, I may not be able to do that because I'm not set up properly. Okay? Everybody follow me? Depreciation. And I told you about employee benefits. So your 401ks, your insurance, your health insurance. Okay? Legal and professional services. I talked about that. So we paying out money all the time. Whatever you paying out money for this business, you want to definitely track it on your sheets every month, and that makes it easy. And then at the end of the year, you can calculate all those transactions. So like if you have office expense, you have on there, I spent for the month of March, and we at the end, the month of March, I spent $100 on office expense. If you buying ink every month, right, and you paying that monthly service, how much is that? $15 a month? You need to calculate that. Paper, pens, your computers, your if you got to get a new charger, if you got to get a new sleeve for your computer, a keyboard, we don't think about none of those expenses. We just leave that money on the table. Am I right? Yes, we do, right? Yes.
Somebody asked a question. She said, they're saying, can I write off the cleaners?
So that's a little tricky. They kind of took that away from us. Because a business owner, you can in a way, but I would say leave it alone, because when they took off uniforms and all of that, just take it off, because it's not that much. And you don't want to get red flag, because you can write off your cell phone. We have so much more that we can write off. Just take that off. Just track that mileage, and that's going to be the highest thing ever. I'm telling you. And these realtor dudes, okay? I talked about office expense, internet. How many of you write off your internet? You don't, huh? One. You don't think about that. You have to use your internet. So that's a write-off. I find a lot of people who don't. If you have a landline for your business, you write that off. If you have a P.O. box for your business, you write that off. Okay? I told you cell phones, didn't I? Yes? Okay.
Yes.
Let's see what else. I told you repair supplies. So if you have to get different supplies for your business, let's say that you have open house, right? And you are making this little cute little things for your open house, that's supplies. But your food would go under other expense because it's food for the open house. Most of us don't write off the food that we get for the open house, right? We don't write off the extra pins or whatever we're getting for the open house. That's a write off. You have signs that you purchase. How many of you write that off? How many of you write off that you know how they come and put your sign up and they take your sign away? Do you write that off? No. Right. People forget about that. Ingrid, you have a question.
No, I was saying I write it off.
Okay, thank you. You raise your hand. Very good, Ingrid.
Sorry, I'm driving. I can't figure it out, but yeah.
Okay, I appreciate your participation, but keep your eyes on the road, okay? All right, so I told you travel. So, we go to the conferences. You can write that off. You got your airline ticket, you got your hotel, and it costs, NARAB is costing us an arm and a leg. We got CAREB. When we go into all of these conferences, y'all keep a record of everything. And one of the things I want to say for you, make sure you have a business account, because a business account is going to help you to keep track. Right? Let's say I don't have QuickBooks, I don't have a spreadsheet, but you do have a bank account. And that's another way for you to be able to track your expenses. Okay. All right. But have it in your business account, not your personal account. Now, utilities. You can write off utilities. If you have an office space and you're paying utilities, that's a write off. If you're paying for your office space, that's a write off. Okay. Many times people don't think about the utilities. They don't think about, if I got to pay trash for that location, there's other expense that you might incur for that location. You want to make sure that you write that off as well. Then always on other expense, I told you mileage, which is very, very, very important. I can't even stress that enough. Trying to make sure I'm not forgetting nothing, so I'm looking at my notes. Oh, mileage. I didn't say this. So I don't have people write off the utility in the home, because you in your home and it's kind of tricky. So I wouldn't say write the utilities off in your home, Sharon. I'm saying if you had a brick and mortar office, you can write the utility. That's easier because you could justify. But then they say, well, how do you know that you only use this amount for your utilities for your home? And you got a husband there and you got grandkids there or kids. They're gonna be like, oh no, that's wrong. So you don't want no red flags. Okay, write this down. This is very important. And I need you to do this today. And you can do this. I need you to do this every year. On the mileage, you also have to separate your business mileage from your personal mileage. And I'm sorry, I forgot to dive into this. Every year on January 1st, when you get in your car, you need to write wherever you have your mileage, start mileage and the date, and you need to put what that mileage is. On December 31st, after you finish doing whatever you're doing, celebrating, and you done park the car and you're not leaving again, you're going to put in mileage and you're going to put what the mileage says. This is going to help you to be able to know your beginning mileage and your end mileage. So today is March 26th. Put your mileage, whatever your mileage is saying in the car, put that down, because then you'll be able to know what is your commuting miles and what is your business miles. And your tax person will ask you that question. What's your commuting miles? What is your daily miles where it's not business? And so this helps you to be able to track it, because you're going to be tracking all your business miles, right? So all the excessive miles that's outside of the business mile is my personal miles. Okay. And that's something that most people don't do. Does that help? I want to make sure that is clear. That's clear? So on your notepad, your mileage notepad, it needs to have the start mileage. And you need to have the date and you need to have the mileage. At end of the year, you get in that car, you can shut it off and you about to go in the house, you put your end mileage. Okay? All right. Is that good? Yes? Okay. Perfect. All right, I'm really good on time. What? Me of all people. Okay, awesome. Any questions for me so far? None? Any tax question that you may have? I track business, personal, and medical. Perfect, Renee. Yes, track your medical. You know you can write off your medical mileage. So if you file a Schedule A, so now we're on your personal. If you file Schedule A, that means if you own a home, you're writing off your property tax, your mortgage interest, right? Your medical premiums, your medical co-pays, but you can also write off your mileage when you going to the doctor. Mm-hmm.
I have a question. What is
Yes.
the new rule for writing off your kids as working for you?
Oh, okay. So if your kids are working for you, but what did I tell you? You gonna handle it like a business, right?
Oh, yes.
Now, do you mean your little kids who are not gonna pay taxes?
Yes, little kids. I mean, my kids
Okay.
are not able anymore, but yeah.
So, but you got to make sure so one of the things that I always tell people, make sure that the job meets the age of the child. Do not have your child who is 5 talking about they the bookkeeper. Okay? No. So you definitely want to make sure that their write-offs is not over $5,000. Okay? But think about it. I see my mom, she give my grandkids money, and I be like, you are just doing that wrong, mama. Because you could just pay them. And that's like they working for you. That's where we mess up. We got to teach and train our kids. Hey, come work with me. And this is how you're going to be able to get that money for them shoes, whatever you want, that storage on your Apple, whatever. This is how you get the money. So, yes, good question. Any other questions? It was something else I was going to tell y'all, but I just forgot. Okay, I've talked.
Yes, can I
Any
ask a question?
Yes, Gloria.
So I have hopefully I can ask this correctly. I was talking to a commercial investor and actually loan officer too, and he was saying that he thinks a lot of mistakes are made when we're trying to write everything off, and it shows that our income is lower than it should be for us to qualify to get a loan for a commercial building, or if you want to go out and buy your own building or something like that. Have you heard or ran into that scenario?
Yeah, so that goes back to what I was saying, Gloria. We have a lot of write-offs. I tell people don't over excessively write off. So I might have $15,000 in write-offs and I only made 20. I need to be careful. Some write-offs I don't need to take. And that's why I tell you guys the mileage, it justify itself. So I may lower my office expense, right? I may have $5,000 in office expense, I only take 2,500. Okay. My cell phone bill, that's gonna be what it is. I can't change that, right? But let's say supplies, I can change that. I can change my travel. So there's ways to adjust. I can change my advertisement. So then that way my numbers look better on paper. If I'm trying to qualify for something, I definitely have to look good on paper. So I have to not write everything off. So I lower it. So like if you're trying to buy something, that's something you have to look at because we don't look good on paper. I mean, I'm with y'all. I don't look good on paper. That's not good because if I'm trying to build wealth, we have to think about, okay, I got to look good on paper. And what you do is you say, okay, I need to look good on paper for 2 years, right? Or I need to save up my money and someone who can look at just the bank accounts. That's the difference if they do bank loans. Did I answer your question, Gloria?
Yes, thank you. That was a good point about the bank. So thank you so much.
Okay. Was that clear though for you?
Yes, it was.
Okay, perfect. Thank you for answering that question. Okay, Sharon, definitely you can call me about the timeshare. The timeshare is almost like that's an income property. So you write it off as a second property. It's not your primary. So you write it off on a Schedule E. But you can call me later. I just want to give you that tidbit in case somebody else had that question. Anyone else? All right, so that means y'all ready to track everything. Y'all excited, y'all ready to take charge, right? Yes?
Yes.
I am a business boss.
A business boss. And I can be honest, you guys, even for me at first, setting up the corporation, because, I think for me sometimes, if I don't know everything, I just don't want to, I don't want to dive into something I don't know, the unknown. But it's like we have to get educated. We have to dive into the unknown sometimes, or the unfamiliarity. We have to do it even though it doesn't feel comfortable. I don't like to feel uncomfortable. I like to feel comfortable, but sometimes I got to be uncomfortable. And so I have to understand that. So, I go to a lot of business classes. I'm always trying to educate myself, not just in the real estate field, but on the business side. And this helps us. We missed out on a lot of opportunities of getting all this money because we wasn't set up in a business. And, we have to think like this, ladies. We got to elevate, and now is the time. 2025, we got to elevate, and we can by making sure that we have our structure together. We don't have to write off everything. You just put that money aside. I'm looking at some tax. Oh, I know what else I wanted to tell y'all. This was a nugget, so let me make sure I don't forget this. I look at some of my clients who got money. Y'all crying about pay, they be over here paying $30,000, $50,000 in taxes. And I'm like, what? Wait a minute. But they're making the money. So the thing that we have to think, we have to get our thinking outside the box so we can make the money and then figure out how that we don't have to pay Uncle Sam as much. But when we do things like buying income property, that helps to have those write-offs. So Gloria, like you were saying, to look good on paper and you were trying to get a loan. But if you had an income property, that you can write off all of that right there, and you can still show income because I have an income property, but I get to write off all of those expenses for my income property, but they will see how much I make, right? So it's ways to leverage on our taxes. So I wanted to give you guys a last nugget: investment accounts that we don't think about. We don't think about buying into stocks. We don't. So as I'm 50, I don't know, I'm 58, going to be 59 in June. So I look at the fact that there's certain things that I didn't take advantage of. Stocks is one. Retirement is another one, right? How am I going to set myself up for retirement? I'm watching these people who have been taught well. They're living off of those dividends. They living off of the stocks. And so we have to start changing our mindset. That's another added piece that I want you guys to start thinking about. When I talk to my clients, when I speak about generational wealth, I talk about the 70-30 rule. Living off of only 70% of your money, 10% to tithes, 10% to a savings account, and 10% to an investment account. If we start having that investment account and investing in stocks, the dividends and all of that, where it's going to pay us and we can live off of that money when we retire, that's something that I want you guys to think about. But on the tax side, what most people don't do is have withholdings. So when you start getting your retirement, your 401ks, when you start getting your Social Security, if you have investment accounts, you also want withholdings to come out of your money, because if you have no other write-off, you don't have no kids no more to write off, right? So then you don't want to pay taxes at the end of the year. So those are some other things to think about. That's an extra nugget for y'all. That's a money nugget right there.
We have another question for you. It
Oh, okay.
says, if I have several businesses, can I set everything up under one corporation?
So Renee, can you unmute yourself? Tell me, like, when you say several businesses, what do you tell me? Tell me about the businesses, and then that's going to tell you how you need to set up your entity.
Okay, notary, insurance, real estate, trust, administration.
Okay, so yes, you can have one business, but you need to have a DBA of all of those. So you see over here, 𝐂𝐀𝐑𝐄𝐁 Enterprises. And what do you see on this side? Real estate taxes, and it says travel and public speaking. And then we do the bling t-shirts. So some of those are under that umbrella, right? And I set the DBAs up. So have your DBAs and then have your business license. That's another thing. Thank you, Renee. Business license. You also need a business license. And I want to share this other nugget with you guys. We miss out on the big money We think just real estate, right? Transactional. I want to think bigger now. When you set yourself up right and you have your entities in line, and this is why I'm saying make sure you have your business licenses. So Renee, you're doing the real estate, you got the trust, and you got the notary. Get your DBAs, get your business license. You want to show that you're in business. This is not a hobby, okay? Real estate, you need a business license. I've just learned I never had got the business license for the real estate, only when I sell in certain cities. But looking at the government contracts, I'm missing out on money. So I want you guys not to miss out on money. It's time for us to elevate. And these are other streams of incomes that we can be able to have and be able to sustain ourselves. We are Black real estate professionals. And I want to say, I'm going to keep it real, 100%. That's me. We're not going to have business like the white folks. So we got to have other streams. And then if we have our entity set up, we have our house set up right? We building that house on the right foundation. We gonna thrive. But if we building our foundation on the shaky and this is sand and this is mud, what it's gonna do? Fall apart. Okay. So yes, Renee, you can have them all under one corporation, but that's going to be important to have the right corporation. You can't have an LLC with all of those business, but C Corp, S Corp, yeah, you just want to talk to the right person. Okay. Did that answer your question?
Yes, thank you.
You're welcome. You help everybody else get another nugget. Any other questions? You're welcome, Sharon. Any other questions? No? All right, I'll make sure I went over everything then. Let me check. Oh, another one I didn't tell y'all about. Health savings account. How many of you know about the health savings account? Wabed, do you in the insurance, do they have the health savings accounts?
Some of my clients do. I don't.
Okay, but the clients, you can set that up. Is what I'm saying.
Mhm.
Okay, that's
That's a
another.
good point. That's a good point.
Yeah, that's another tax benefit. I forgot to bring that out. That's another benefit, and we're not taught about the health savings accounts. So, ladies, I'm telling you, that's something to look into. Especially, like I said, we are self-employed. We want to make sure we maximize every area, every aspect of our finances, and it even helps on our taxes. So health savings accounts, that's a tax write-off as well. Let me see what else. I talked about the estimated taxes. And then when you have estimated taxes, that helps you not to have penalties. So, people who don't want to pay their taxes, so they get an extension for October. But if you have estimated taxes taken out, that's a plus. So it's like your withholdings are coming out. So let's say your estimate, I used the example before, 2000, did I say 2000? Whatever, I'm gonna just say 2000. So you done put $6,000 away in your estimated taxes. So when you do your taxes, your tax liability is only 3,000, but you already put 6,000 away, you're gonna get a refund of $3,000. So that's another way for you to think about it, okay? All right. Any other questions? No? All right. Let me
Let's put
see
a
what
question in there.
Okay.
So you said that most real estate people should probably be like the S Corp. So if I was an S Corp, what tax form is that?
I'm about to get it for you. That's the 1120.
Oh, okay.
And then with the corporation, something else you need to do, and I was trying to have somebody help me do this and they didn't. I have to go back. But you have to also file with the Secretary of State. You got to file your statement of information. So you want to make sure that you have that too. So that's the S Corp is the so you got the California, so you have your franchise, that's the 100S for the franchise tax board. So you got to understand you have your form for the state and the federal, okay? I gave you the federal, but I also gave you the state.
Okay, the next question is, do they have any software where you could do it yourself, or if I switch now, I got to go to professional?
When you say do it yourself, what do you mean?
Like Free Tax USA, most people, if you file in 1040 and Schedule C's and A's and E's and all that. You could do it yourself. You just answer questions. You can file your own taxes. So my question is, if I switch, do they have some kind of software where I can do it myself? Or now I got to go to professional tax accountant, tax attorney to have my taxes done?
Well, here's the thing. So like TurboTax does have the software, and I work with them as well. This is actually my first year working with them. I work on the side and I work with them. One of the reasons I do work with them is because I can do my own business on the side versus some of the other tax companies. But I have looked at their software, right? And they have the business edition. So it'll walk you through asking you the questions, because that's basically what you asked me, right, Renee? So you want to be able to be guided in filling out the documents.
Correct.
So yes, it does have the questions and you'll be able to walk through.
Okay. All right. Thank you.
And you can buy it. So if you need it, let me know, because I do get a friends and family discount. So if you need a discount, I can get you a discount.
Okay. All right. Thank you.
Okay, you're welcome. Any other questions? I hope I answered all yours, right? I didn't leave none out, right?
No, yes, you answered everything. Thank you.
Okay, perfect. Okay. Any other questions? And these are good questions. I'm glad I left time for questions and answers, because sometimes I go past the time. Anybody else? No? So y'all ready? Okay.
Well, I just want to say thank you to Miss Anna. I was telling Anna before we came on that my husband, well, he passed away, but he was an enrolled agent and did taxes. And I remember when I first started doing real estate, Anna, I remember I said I went to, what was that called? Jackson and
Hewitt.
Yeah. Well, heck, I knew more than what the guy knew, right? I was like, no. And so I said, Renee, I said, I want a tax person that knows business taxes. Let's see that. I don't want to leave any money on the table or do anything wrong. Now that guy later became my husband, Renee. So sometimes, okay, it's better to go ahead and pay for that person, right? But you guys, I mean, one of your biggest expenses is taxes.
Yeah.
And if we don't do that correctly, you guys, it's going to cost you in the end. So I learned that, and way in the very beginning of my real estate career, you guys, is to hire somebody. It's too important, guys, for us to do it wrong. Is what I'm saying.
And make sure they know. You said an important and I hate to say this, but you recorded me. But yes, you just make sure that they know what they're doing.
Yeah. 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 Myself, well, that's not right. And it's like I'm brand new. It's kind of like I know that's not right, but okay, whatever, guy. So
and one other nugget I want to share with you guys. A lot of people are scared to talk to the IRS. I tell people, the people on the other end, and this is something that I learned. They just like you. They don't even know taxes.
Right.
And I learned that calling in about a client, and I'm up there telling the lady, I'm telling her about tax. I said, oh. So don't be afraid to call the IRS when you have tax issues. They want you to communicate with them if you have tax issues, or even if you owe, you can set up the minimum, you can set up hardships, but communicate. And, we do get busy, but communicate with them. Yeah. Okay.
Yeah. All right. So once again, thank you, Miss Anna Queen Tut, for all that valuable information. You guys will also, get a copy of this recording, just go back, and hear her, nuggets again. But thank you guys all for being on our Hour of Power. And you guys, we're going into the second quarter, right? So you guys, let's make sure you guys that this first quarter, we got everything wrapped up with our taxes. Taxes are due on April 15th. For businesses, it's due in October. What, Anna?
No. So this one of the corps was due in March. But no, that's the extension for October.
Okay,
so if you want an extension, that's October. So file your extension now. Don't wait till the last minute. But if you know where your numbers are, then make payments on, just make payments on what you owe if you owe. Because you're going to get penalized trying to do it later. Just get it out the way. Busy. You got to go make that money. That's gonna push you to make money.
So thank you, Miss Anna. Can you guys all give Miss Anna a big hand for taking her time during tax season to come and see us? I appreciate you so much, Miss Anna.
You are very, very
welcome. All you guys, next month, the second and fourth, you guys, Wednesday of the month, you guys, for some more powerful, powerful speakers for our Hour of Power from CAREB. Thank you guys for being on. You guys stay
Thank
safe
you.
out there.
Thank
Bye,
you, Bobby, for
everybody.
having me on.
Thank
Appreciate all of
you.
you. Thank you, my Realtors family. Love y'all.
Bye.
Thank you.
Bye,
Bye.
guys. Bye-bye.